Hey all, so this is going to be our last video for microeconomics because it's our last concept that we have to talk about for micro. And so this video specifically, we're going to be going over inequality. And so give yourselves a hand. You guys are almost there. You guys almost finished micro. And so before we get to the video, a joke. How does a penguin build his house? He glues it. So the Lorenz curve. And so we use the Lorenz curve to measure income distribution. And so when we're looking at the Lorenz curve and measuring income distribution, the government is going to divide all income earning families into 5 equal groups. So group 1, group 2, group 3, group 4, group 5. Each group is going to represent roughly 20% of the population, right? So if there's 5 groups, each group representing 20%, we get to 100% of the population there. And so what the government does is they compare the actual distribution and how far it is from the perfect distribution. And so if we look at this slide, this is the Lorenz curve, right? This curve right here is our Lorenz curve. And that curve represents perfect equality. In other words, right? 20% of the families earn 20% of the income. 40% of the families earn 40% of the income. 60% of families earn 60% of the incomes, and so on and so on and so on, right? Until we get to 100% of the families earn 100% of the income. Well, we know that no country has perfect income equality, right? 40% of the families do not earn 40% of the national income. And so here, right, the Lorenz curve is how far off or out the curve is from the actual perfect equality curve, right? So our perfect equality is this curve right here. The Lorenz curve, right, is this area right here. And basically, right, in between what's shaded in yellow, right, what's shaded in yellow over here represents the degree of income inequality. All right, and it looks like a banana, right? So the larger the banana, the greater amount of income inequality we have. The smaller the banana, right, the less income inequality we have here. And so we can use the Lorenz curve and calculate it and use higher level math to figure out a number called the Gini coefficient. The Gini coefficient at the end of the day is just a singular number that indicates income inequality. And if there's an extremely high number, that represents an extremely high degree of income inequality within the country. And so that brings us to welfare, right? Welfare is just retirement, unemployment, workers' comp, healthcare, etc., right? Essentially the safety nets of society. Well, here, how a country pays for their welfare programs is through taxes. And so there are 3 different types of taxes you guys need to know. And so before we get there, we first have to talk about what taxes are. Well, taxes are mandatory payments made to the government to cover the cost of governing. And the government taxes for 2 different reasons. One, to finance everything. The government needs to have money to pay for everything. And number 2, influence economic behavior of firms and individuals. If they say this industry is polluting too much, they might provide tax incentives, right? Or tax breaks, tax credits, to incentivize firms to pollute less, right? And so the 3 different types of taxes are progressive, proportional, and regressive. A progressive tax takes a larger percent from the higher income groups. In other words, you're taxing the wealthy more. That is a progressive income tax, or just a progressive tax in general. And so here, an example is our current federal income tax system. If you make more money, you pay more in taxes or higher percentage of taxes than those below you, than the poor people. Next is a proportional tax. It takes the same percentage of income from all income groups. So if our tax system was we're going to take 20% flat income tax across all groups, that is a proportional tax. And lastly is a regressive tax, which may seem a little bit backwards, but a regressive tax is a tax that takes a larger percentage from low-income groups. In other words, the poor pay more in taxes. An example of that is a sales tax, right? So let's say the sales tax is 4.75%. Well, that 4.75% is the same, right? Whether it's a person making $1 million or a person making $10. And so if you're making a $10 a year, which is not a lot, right? That is a regressive tax because it's taking a significant chunk of your annual income compared to someone who's making $1 million a year. And so here, right, I want you guys to pause the video. What kinds of taxes are these? All right. So number one, a toll road tax, $1 a day. Well, that is going to be a regressive tax. And the reason why that's a regressive tax is because it's $1 a day no matter how much you earn, right? So people who make less money, right, who are poor, that $1 consists of a significant amount of their annual income compared to someone who makes $10 million a year. Number two, state income tax where richer citizens pay a higher percentage. Well, that's a progressive tax. Why? Well, because richer citizens pay more in taxes. Number three, a 0.35% tax or 0.35 cent tax on alcohol. Well, that yet again is a regressive tax, right? Because if you make $30,000 a year, that 35-cent tax takes out more income compared to someone who makes $10 million. Number four, Medicare tax of 1% of every dollar earned. Well, that is a proportional tax, right? Proportional tax. And the reason why that's a proportional tax is 1% of every dollar earned, right? So if you make $10,000, they're taking 1% of that. If you're making $1 million, they're taking 1% of that, right? So that is a proportional tax. Lastly, 8.25% sales tax. This example we used in the last slide. We know that that is a regressive tax because that 8.25 hurts poor people more than it does richer people. All right. And so the good news is you are now officially done with micro, right? This is the last concept of micro here. And so I hope you guys learned a lot as you guys watched all these different videos. I hope you guys revisit some of these videos as you guys prepare for the AP exam in May. All right. I'll catch you guys in macro, right? So I'll see you later. Peace.